Hi everybody. So I was on vacation in Italy for 2 weeks, so I didn't do a lot of videos, but I'm back and I wanted to talk about losing money and how much you stand to lose by trading stocks, and basically how to decide how much to lose, which sounds like a weird question to ask, like how much money are you happy to lose? But the reality is, when it comes to trading stocks, most people think of it as a way to either get really, really rich or lose everything. And while you may not get really, really rich, you also don't have to lose everything. It all comes down to one word, or maybe it's two if it's hyphenated, but it's stop loss. What's your stop loss? And if you don't know what a stop loss is, it's something you can set up on Ameritrade to sell a stock as it drops to a certain level. And there's different kinds of stop losses, right? There's trailing stop losses, which I'll get into later in the video, but really it comes down to your comfort levels, right? How much are you happy to lose? And I know the answer might be none, right? I don't want to lose anything. I want to maximize profits and minimize losses, and I don't want to lose. That sounds nice in theory, but part of trading stocks is that you will lose money. It happens, right? Because stocks are so volatile lately that a stock might open at $10 in the morning and immediately drop 3% before immediately recovering and going up 6% at the end of the day. So if you are too trigger happy, you might be unnecessarily wasting and losing money, right? You might see your $10 stock drop 2% and go, I'm out. And you might be too reactionary. And stocks are volatile, so you need to have some wiggle room. So you need to have some level of pain threshold that you can handle, that you can take when it comes to trading stocks. So let's just break it down very easily. If you have $1,000 that you're trading with, a 10% stop loss is $100. If you've got $10,000 that you're trading with, a 10% stop loss is $1,000. That's a lot of money to lose. And if we make it easy, right, and we talk in numbers like $10 or 100 shares or 10%, the math is a little easier to follow. So a 10% loss is either $100 if you're trading with 1,000, or $1,000 if you're trading with 10,000. A 9% stop loss is $90 or $900. An 8% stop loss is $80 or $800. Goes all the way up. So are you happy losing, if you're trading with $1,000, 10% of your money? Maybe not. Especially not if you're trading with 10,000. 10% wipes out a full $1,000. What is a more realistic stop loss? Maybe 5%, maybe 4%. Now, typically, back in the olden days, before Trump was president and things were so volatile and so crazy, and even before the recession, if a stock was down 1 to 9%, it was okay. It was a good level. You could hold your stock within that range. But most traders many years ago used to say 10% was their stop loss. And that is because you want to give yourself some wiggle room. You don't mind if the stock is moving in this kind of like roller coaster pattern. But once a stock breaks that 10% downside, it starts to make other traders anxious, right? They're following the charts, they're looking at all the reports, they're seeing the news, the headlines are out, this company is down 10% in a week, then it's a snowball effect, right? Once the headlines come out that a stock has lost 10% of its value or 10% of its stock price in a week or a couple days or whatever, other traders start selling. So if you're holding that stock at 10% and it drops below, now you're really in trouble, right? Because it can drop rapidly. And we all know that stocks go down way faster than they go up. So that's something to keep in mind when your stock starts to drop, is pay attention to that level, right? If you choose a 5% stop loss, so either $50 or $500, You have to be prepared to ride that wave, and you also have to be prepared to pull the trigger. I know that's the hardest part because we convince ourselves, hey man, I picked this stock, I liked this stock, I researched this stock, I did all the right things, I looked at the earnings, I looked at the news, I looked at the analyst reports, I looked at the charts, I studied it, I went I watched videos about this company, I went on the website, I learned all about their products, I put my heart into this, I really researched this stock, I can't be wrong. It's an ego thing, right? Like, nope, not me, I can't be wrong. I did this, I picked this stock. But that's what gets traders in big trouble. It's ego. And you gotta push it to the side. You gotta just say, hey, I said if I had a 5% loss in the stock, I would sell it, and I have to do it. Because what's a 5% loss on Monday could be a 20% loss by Thursday. And then you won't want to sell the stock, right? Because now 20% of your money is gone. And although it is possible that the stock might come back, how long, right? We all know, like I just said, stocks drop faster than they go up. Last thing you want is to take your $10,000 where you've now got a 20% loss. And I'm speaking from experience because years ago, I didn't know what stop losses were. I didn't know how to pick a number that I felt comfortable losing. I would just say, well, I picked it, so it's got to be good. And then it would drop. And it would be down 20% and then 25%. And then earnings report would come out and it would drop another 20%. And I'm sitting there now on a loss of 50% of my money on a $10,000 investment. And that's how I learned how to trade stocks, because I was looking at it going, there's got to be a way to minimize my loss. This was 12 years ago. This is long before I was really even actively trading. I didn't know any of this stuff. I didn't know any of this terminology because YouTube videos like this and books, I didn't think to look at those. I just thought, I researched it, I bought it, it should go up naturally. And naturally, that is wrong. So what I would end up doing is I'd put 10,000 into a stock. It would drop 50% over the course of months or years. And I would just sit there waiting. It'll come back. And slowly over time it would, but drops faster than it goes up. And that's $10,000 that I once had that I no longer have to trade with because I'm stuck waiting and hoping it comes back. So at the end of the day, how much are you comfortable losing is a personal question. Some traders, if they're investing hundreds of thousands of dollars, their stop losses are 1 or 2%, right? Because that's a $10,000 loss in a second, 1%. That's a lot if you're trading with 100,000. Nobody wants to lose 1% of their money. But if you're trading with less, you have a little more wiggle room. Your stop loss could be 3, could be 5, but you want to pay attention to the stock before you make your decision, because you want to have a good understanding of how the stock moves in a volatile market. If the stock is typically swinging down 4%, up 4%, down 4%, up 4%, maybe you don't want a 4% stop loss. Maybe that's too low because the stock is bouncing around those levels. Maybe you want a 5%. Maybe you look at it and you go, hey, I noticed that this stock typically does drop 4% every day or two. But then it never goes below 5%. So my stop loss on this particular one is going to be 5%. Whereas I know with this stock, it's very volatile and it can go down 8%, but then it can go up in a week or two, 16% or more. So it depends on the stocks as well. And it's personal. And I said in the beginning of the video, I would talk about a trailing stop loss. I am not going to do that because this video is almost 10 minutes, but I will do another video later where I talk about trailing stop losses. And if you just got to know right now, you can Google it. Thanks. Please subscribe. Like this post, tell your friends about it. Follow me on Instagram. My hashtag is Trade, Invest, Simplify, and have a good day.